Hey everyone, I'm Steven Tulman, founder and CEO of Clover Mortgage, and welcome to Mortgages Uncensored podcast. I'm joined here with Sam Ghasemi, my Chief Compliance Officer, and Rushi Parikh, one of my top agents, and we're going to be discussing on a monthly basis all things related to mortgages, real estate, finance, in order to help educate the public into making the best decision for their personal needs. So, when I was buying property back in, I think, November of 2018, I was dealing with my bank, who I was banking with for many, many years at that point, I think 20 plus years. And the experience I had was less than lackluster. I was running around, given the runaround. It was very unpleasant. I had to chase the mortgage specialist at the bank to get an answer and an update. And it just left a really sour taste in my mouth. So I thought to myself at that time, why not build a better brokerage? And I partnered up with an acquaintance of mine who was introduced to me through a mutual friend, and we founded Clover. And this was 2018. We got our brokerage license in, I believe, August of 2019, and we started growing. We introduced online lead gen to our agents. We created a whole training methodology, and as the brokerage grew, our visions and views, went into separate directions, and I ended up acquiring the remaining shares of the brokerage. And here we are today. I mean, this whole thing stemmed out of a desire to provide clients and customers and people buying homes and homeowners with better service, help them and empower them with knowledge and understanding of what they're getting into, what their options are, so that, again, my goal, my fiduciary duty and my personal duty is to ensure that everyone's given the right product, the right advice, and is put into a mortgage that helps them and their families grow for the future.
That's really interesting, Steve. As you know, I've been brokering for 25 years. So this is exactly what happened to me with my experience. I was very young. I bought a condo and I wanted to put only 5% down. So there were a lot of brokers who were actually looking for my business, right? And I gave my file to a mortgage broker at the time. And we're talking 25 years ago, where prices were 110 to 115,000.
Wow.
And I had a broker I ran around for over 3 weeks to get an approval from this gentleman, right? So I was applying to get the best rate, right? I owned my own business. So he promised me that he's going to give me a variable rate at prime minus, half. For audiences that don't know, that's 50% below what the prime rate at the bank is. However, by the time the approval came, I saw 6.5. When I went and I asked him why, he said, "Well, you don't qualify." I could not afford 6.5, so I had to look for other brokers. Eventually, I found the right broker who got me the right rate, and I closed on time. That was then when I decided that I should pursue this business and become a mortgage broker. And it's been like that ever since. And that's exactly what you said. It's just to help people out to get the right product, the right service with the right broker. And that's how I've been doing it for the last 25 years.
And it's generally a person's largest investment. For many, it's their full life savings that goes into it. And if it's mismanaged by the wrong banker, the wrong broker, it could really screw them up.
And it's not hard to do, right? It's not hard to do.
It's not hard to do right.
Yes,
It's
not hard to do if you find the right people with the right knowledge. They know their product. We have access over to 300 lenders. Last year we worked with 98 lenders. We have everyone at our disposal. So if you do know what you're doing, and then you do your due diligence and know your products, you can actually take care of a lot of borrowers.
Yeah, it helps them set them up. So why'd you join Clover?
Well, so I've been doing this for 25 years. I've been, hopping around different brokerages, finding, my spot. I went through so much transition. I did construction financing. I did private lending. Being one of the people that started this a long time ago, let's say 25 years, sometimes you get burnt out doing, we used to do a lot of files. I'm probably this week will surpass 1,000 files. I've done 1,000 transactions in my lifetime as a mortgage broker.
That's amazing.
Yeah. So I was looking for a change. I was with one of the big franchise brokerages, but I wanted more involvement. I wanted more involvement with the brokerage itself, and I wanted to be a part of compliance. To be honest with you, I always wanted to do compliance, and as we move forward through the mortgage industry, we'll find out that compliance is becoming very important, integral part of doing brokering. And that's when I put the word out there through all my friends and my contacts out in the business and say who needs a compliance officer and someone that can take a brokerage to the next level. Knowing lots of brokerages do not do their AML and FinTrack and regulator compliances on time and properly. And that's when I was introduced to you all, obviously, and we met. And next thing,
I was actually introduced to Sam by a mutual friend who was a senior auditing manager at FISRA at the time. And when I spoke to her saying, "Hey, I'm looking for a chief compliance officer. We're at that point where we need one," she goes, "You have to meet Sam." And I'm very thankful. We should take her out for dinner or lunch sometime.
Absolutely. And then we met for lunch, and then it was in the first 5-10 minutes we knew this is a fit.
Yep.
And it's been working out great so far. So
it was mortgage love at first sight, basically. And very, very glad and fortunate to have you.
A large group of very talented individuals in our brokerage, and obviously our top producer, Rushi, is here, and then he can tell us why he joined Clover.
Yeah, you've been with us now for what, 4 years?
4 years, yeah.
Holy cow.
Well,
Time flies.
Yeah, I was new to the industry. I joined during COVID years when everything was booming and then everything busted.
And you were with another brokerage first for a year.
Yeah, I was with another brokerage. The industry is a little weird. You get your license in like a week or two, and then you're just out to fend for yourself. And a lot of brokerages, they don't put the time in to actually help train, help educate, nurture the agent. They're just kind of, here's a few things and go on your own and close a mortgage. So again, we tried our best at that other brokerage, closed like about 8 deals in a year, which was great for. Yeah, and then I got introduced to Steven through a mutual connection, another lender that we use.
That was actually a private lending partner of ours that said, "You need to meet Rushi." And I said, "Okay."
Yeah, and we had an interview, got some lunch, and just hit it off, right?
Yeah, we sat together in the same office next to each other for the first 6 to 8 months, 4 or 5 days a week, and worked on every deal together. And how many deals did you close in your first year?
Yeah, I got to 41, I think, in my first year. So with Clover, so it was
went from 8 to 41 in a year. It's a lot of clients that you've helped. That's good.
Yeah,
that's very good. And what do you like about the industry?
I love it. I mean, you can make your own hours. You can make as much money as you want until as much as work you can handle. Cost of actually entering is pretty low, and the rewards are amazing.
Great.
And what I noticed over the years, Rushi, this industry is not for everybody. Do you agree with that?
I agree. Of course.
It definitely is not for everybody.
It takes a certain mindset to be able to kind of take the risk on and be okay with not making a single dollar for 6 months, a year, and learning and just trying to.
Oh, because we deal with so many different lenders and so many different types of borrowers, of customers that have different ways of earning income, different ways of declaring income, different credit ratings, different life situations. And it takes someone that can put themselves in a borrower's shoes, understand them, and navigate the 98 different lenders that we worked with and the hundreds of mortgage products that are each nuanced in their own little way, to understand which one fits that customer.
And also to deliver satisfactory service, both to borrowers and lenders. As everyone knows, we represent most of the time borrowers and lenders in the transaction. You have to be significantly educated and knowledgeable with the products, with the services, and the guidelines that every day changes, And I find that most agents have difficulty adapting to new changes, new policies, new regulations, new guidelines. And those who are, every day show up for work and, they get knowledge on products, guidelines, and they succeed. So that's my experience with all the agents that I've seen. I've seen so many come and go in this industry over the last 25 years. And that's why I think we are working with a large group of talented individuals at Clover. And all hats off to you for making sure that this brokerage, is what it is now.
Yeah, like I always say, this like we're not salesmen, right? We are problem
We're
solvers
not
at the end of the day.
salesmen. We are problem solvers.
If you come into this industry thinking, oh, I'll just hammer out calls and I'll be able to sell, it won't work.
Yeah, it's like prescriptions. Like we're doctors and we're prescribing, medicine to people who are actually looking for help. Whether it's a refinance, purchase, renewals, people need to borrow money for their businesses. They need to take out a credit line. I mean, the vast of products are just endless. There's so many products and services available to us.
Maybe that should be the name of our podcast, Mortgage Doctors.
And mortgage doctors. Mortgage doctors. I think that's good.
We'll see. Mortgages Uncensored, Mortgage Doctors. It's our first podcast. We're figuring
Finance. Doctor
Finance. But you're right. You're dissecting it. You're dissecting the situation of every borrower, and sometimes there's multiple borrowers, and they each have different situations, and you're putting it all together, understanding what their core needs are, what their short-term and long-term plans are with their properties, to figure out what kind of mortgage, what terms, what rates, what payment structures, what repayment penalties, what lender is going to approve them for the most suitable product. And that's a big thing that our regulators are talking about. FSRA for many years now is mortgage suitability.
Yeah.
If you're putting a client at the mortgage that does harm for them, that's not suitable for them, that they won't be able to pay, that will keep them locked in for too long, all these little factors that we need to take into account.
And the big reason why, again, a lot of problems that we're seeing in the real estate market right now with falling prices are suitability.
Suitability, yes.
Yeah. And finding a mortgage that is suitable for the borrower is the number one thing that we have to do in our industry.
And as part of compliance is a big part of our fiduciary obligation to the borrower to make sure we put them in the right mortgages so they can afford and they're suitable for them.
Getting back to what you were saying about the quality of people that we have here at Clover, I'm truly blessed. I'm truly blessed to have found this group of individuals that, I trust them, they trust me, they trust us to help grow in the right direction, help the customers, provide them with the right service.
But you can agree, it wasn't easy, right?
No, it's not easy.
We really look for the right people to hire, right? I mean, we just don't hire everybody. We look for the agents that are actually knowledgeable, right? And they know their products, and they're willing to learn too, right? They don't have to be, right off the bat be top seasoned agents, but we do have extensive training sessions that we provide, and as long as there's a will, there's a way, and we just need people that are motivated and they want to hustle and they want to choose this as their primary income and job.
And we have great relationships with our lenders. And I'm very protective over the culture that we've developed at Clover Mortgage. It's very collaborative. When a borrower comes to one of our agents, they're usually not just working with one agent. They've got the support of another one or two or three agents overlooking that file, helping collaborate on sharing resources, sharing knowledge. So it's not a closed off brokerage. It's a very collaborative, family style way of doing business, which I really enjoy.
Yeah.
You have to enjoy the people that you work with.
Yeah, awesome. It's been great.
Let's talk about what we're seeing now. And I think this isn't talked about much because people are missing the opportunity that's clearly in front of our faces right now. Rates are low. Prices have fallen drastically. I mean, properties that were bought a year or two ago for $1 million are now selling in the GTA for $600,000 and $700,000. Rates are low. Prices are low. This is the first time in 5 years that a first-time home buyer can get some good value. A new investor into the market can become cash flow positive on their investment after taking into mortgage, maintenance, and all that stuff. You're now cash flow positive for the first time in 5 years.
Look, Steve, if you're a seasoned investor, you're a kid in the candy store right now. There's so much selection is endless. So on the weekend, I drove to Friday Harbor, right?
I love it there.
Yeah,
So
one of the most prestigious
Take off there last year. It's very
townhouses,
nice.
complexes in the GTA, right? The shops.
like a resort.
Yeah, it's
like
like a resort, right? So this gentleman bought this unit for $1.8 million, right?
Wow, yeah.
Rates went up.
Yeah.
Now he's had it in the market for $1.1 million. The last offer he's got is $950,000. That's almost 50% off the price. And I remember when I wanted to
Holy
buy this
cow.
for my clients, right? We had to line up. They wouldn't answer you properly, right? And you really had to be,
Like an insider.
very insider or very close to the developers in
Yep,
order to
I remember
be able
that.
to secure a unit.
I remember that.
So now people that have bought these big units, they're letting it go. Most of them are furnished, right? Airbnb guidelines change around Friday
Yep.
Harbor. It's not easy to get renters in there, and they're in massive mortgages. Now they're letting it go with like crazy prices. For me, I think 50% off is a no-brainer. If you're a seasoned investor, you can probably get cash flow positive.
Yeah,
right?
now's the time to buy.
Now's the time.
If you have the money for a down payment, if you have the sources, if you have family that will give you gifted down payments, anything like that, if you have the resources, now's a good time to buy and hold because the market's going to recover. It's going to take time. No one's saying.
Look, I tell everybody this. If you're going to stretch yourself, no.
Don't do it.
right?
Don't do
But
it.
if you're going to be paying, if someone's going to pay your mortgage, you should definitely do it. And you have the money, we always know there's nothing better than a long game in real estate, right? Real estate is long game. It's not short game. A lot of these people that are having these difficulties are because they went for a short
Yeah, they were speculating 1, 2, 3 years out in the future. They're thinking, okay, I'll buy today. 3 years when it's done, I'll make a killing. But that's not real estate. Real estate is 15, 20, 30-year holds, and you make small increment gains.
I have real.
And the opportunities are not just limited to one location. So I have, as part of assignments, I have access to a lot of assignments that I see right now. My friends, they send me every day. Condos are selling for $200,000 to $300,000 less than asking what they bought for. Wow. Yes, obviously the appraisers are problems. The appraisers come with less, but a lot of original buyers are paying cash, to close these transactions, to assign these transactions because they can't have it on their books.
Well, some of my friends who are realtors and some of the realtors we work with, they have beautiful, spacious townhomes in Thornhill and Vaughan, going for 1.2 to 1.6 million. 2 years ago, they were all
you
going
can't buy that.
over 2 million.
Yeah.
So the value's there. Whether you're an investor or trying to buy your first home, getting into the market, I mean, if you sit around and wait too long, we don't know how long the bottom of the market's going to be here for. At some point, it turns.
And at some point, there will be a supply crunch, right? There's no cranes. There's no cranes downtown Toronto. There's no one building anything right now. So what's going to happen in 3 years?
Yeah, but MCAP released a report last month, I think, that we have already hit bottom of the market, right?
Yeah.
And the market will not move. And if they move, but they're not going to be significant move. The significant movement have already happened, right? The average sale price right now in the GTA is $944,000. This is compared to $1.332 million in 2022 at the height of the market. So we have a $350,000 decline already. Basically, that's what everybody says, 25 to 35% decline on an average. So if you're living in Oakville all the way to Oshawa, average home prices have taken a hit for 35%. So would it go down more? Maybe. Nobody knows the market. You cannot time the market, but it will be significant? No. So if anyone needs to get in right now with these prices, with the rates still at a premium, I mean,
and even,
perfect.
Even condos, there are companies that are buying up hundreds of millions of dollars in condos and turning them into rentals.
The inventory is going to get absorbed.
Inventory is going to get absorbed. It's already getting absorbed.
Yeah.
There's
and there are no cranes. There are no cranes in Toronto at this moment.
In April and May, there have been some bidding wars in certain pockets on condos, on single-family detached homes,
So the
on
next
townhouses.
the next few years, this inventory is going to get absorbed. But guess what? No cranes. That means no new units coming to the market. So everyone that have their units now, although it's lost value, in 2 to 3 years, I'm confident that prices will go back up where they are because there's going to be a shortage of inventory.
Yeah, and they're thinking really, really hard on opening up foreign buyers again in 2027. So if that happens,
and immigration will also come back up. I think last year we had a net people leaving the country actually and coming in, but I think that's gonna reverse. People will start entering, immigration will start coming back up, and houses will get picked up.
So yeah, to summarize, basically, is it a tough market? Yes.
100%.
Is the market not the same as before? Yes. Are we being too optimistic? No. We're just looking at opportunities, right?
So we're
this market
using what
is-
we know from the past,
Yes.
what we see right now. Again, if you have the money,
Yeah.
if it's not a stretch, and you're looking and hoping to invest, or you wanted to buy 5 years ago, 2 years ago, and you missed the boat,
Yeah.
now's a good time. The boat is there. The boat is there. So we've established that now's a good time for a first-time home buyer or an investor to get into the market if they have the means. If they're over-leveraging and stretching themselves thin, probably not. But so here we are. We're that first-time home buyer. We're the investor. Now we're ready to go in. We're ready to get into the market. What do we do next?
Okay, Steve, for first-time home buyers, it's imperative that they call their mortgage broker right away when they want to make a decision. They have to be pre-qualified. The market is not the same as 5 years, 10 years ago, where you can call out lenders and send out an application, you get an answer within 2 days. They're busy most of the time. Some of them understaffed, as it's a market is slower than anticipated than before. I mean, they like to say that we're busy, but we know some of them are not as busy as before, and they've let staff go. Short staff, busier market means longer, answering time. So basically, as soon as you find out that you like to purchase or you have a property in mind, contact your mortgage broker, preferably Clover Mortgage, and get your application going. By the
Now
time
you're saying that for a
pre-qualified-
first-time home buyer, but I'd say it's equally as important for an investor, especially if they already have a portfolio of 1 or 2 or 3 or 10 other properties. We need to be able. Many lenders will limit the amount of real estate an investor can have.
So
before
I'll
approving.
tell you
we
one
need
thing.
to put that together.
Right now, it is much easier to buy a property as a first-time home buyer than it is as an investor. If you're a first-time home buyer, let's say you recently moved in with your girlfriend or your wife, and you want to buy your first home, a bank will jump at the opportunity to get you a mortgage because they know you're the lowest risk profile for the bank. If you're an investor with 4, 5, 6 properties, it's going to be very, very, very tough for the next property to be gone at the bank as well.
Which proves my point. So investors need to get pre-approved with the same sense of urgency as a first-time home buyer.
Yes, the reason I say that is because investors have already had the experience of purchasing and signing loan documents. First-time home buyers traditionally need extra care
100%.
because they ask questions, and they're entitled to ask a lot of questions because they haven't done this before. So they ask questions from their realtors, from their mortgage brokers. For example, they might not know a lot of terms that we use in mortgages, like APR, qualification, stress test, right? So it would take longer for first-time home buyers to feel comfortable signing loan applications.
Yeah, that's true. They need to have more explained to them. They have to be educated, even as much as a down payment. A lot of people don't know who can gift a down payment, how a borrowed down payment will affect them, how their parents going into their line of credit to give them a down payment might negatively impact their mortgage application if it's not done in the right way. So there's a lot of little nuances that we have to help and guide first-time home buyers.
And there are also lots of incentives available to them that they might not know. Most important one, the land transfer tax. First-time home buyers, they get a rebate, whether they buy in Toronto, whether they buy in GTA. Second is the cashback incentives from most of the lenders, right? You purchase a home, you get a mortgage, you get cash back from the lender. And third is the HST rebate for first-time home buyers for new construction homes.
Yeah, those are great incentives. With regards to the HST rebate, though, that's one that irks me. Not for the first-time home buyers, it's great for you, but what the government really did here is they bailed out the builders with that HST rebate.
Yes.
They bailed out the builders. And in our current market, our government needs to start taking care of the actual consumers, the borrowers, homeowners, home buyers. When people aren't able to make the mortgage payments and they go into arrears and go power of sale because the rates 5 years ago were low, they locked them in, then the rates skyrocketed, and now they're down again, and they're paying ridiculous mortgage amounts, and they can't afford it, and the lenders are taking power of sale, or people that bought 2-3 years ago pre-construction and the values drop and they can't close and they're losing their life savings. Our government needs to stand up and start supporting these people. rather than sending billions and tens of billions and $20 billion overseas every year.
So Steven, you said something interesting, power of sale. Let's give the audience what that means.
Yeah, we'll get there, but then Steven is right? 2022, right after COVID. I mean, during COVID, everybody knows the government of Canada brought the rates down to 0%.
And said they'll never go up.
They never go up, and they give you money, right? They paid everybody $2,000 at home. You know, some families they took advantage of that,
And they took money back.
More money back. Anyways, so for years and years, they said they're not going to move the interest rate. But guess what? After 2 years, in 2022, they started moving rates. And that was significant in terms of people being able to afford their mortgages. Not only that, most importantly, people bought new construction condos, right? In 2022, 2020, myself in 2019 at $700 to $700 a square foot. But things got out of hand now because the government was just sending everybody money. People had free money, right? Zero interest rates. So they started buying stuff, cars, condominiums, right? Lots of new construction condos. I remember I bought a new construction condo for someone in Scarborough for $1,500 a square foot. That is ridiculous for a condo. But now that the prices have gone down, they're talking some $70 billion has been wiped out from the condo market. That means somebody lost that money, which are the borrowers. So what does the government do? They need to bail out the condo industry. They should have bailed out the condo industry. They should have come in the mortgages with the borrowers, say, listen, the values are down, right? But we're going to honor the purchase price. We'll go in as a co-ownership on the condo, right? A lot of these people want to keep these condos, right? Especially if you're owner-occupied, we go in on the deal with you. And when you sell, we take our ownership back. That's what I think they should have done instead of just leaving everyone hanging. And they're not able to close. They cannot close.
Anything would be better than what's happening right now.
Yeah, it's ridiculous what's happening right now. People are just losing, hundreds of thousands of dollars, right?
Yeah, and a lot of times it's their life savings. I mean, that's what makes the opportunity good for new buyers, but for the people that are losing, it's very sad. And we see this happening. And our government needs to step up.
Well, the thing is, a lot of it was speculation, right? So the government didn't do anything when people were making hundreds of thousands of dollars, and builders would have taken a hit. They bought at a certain price, they sold at a certain price, and now when values are coming down, again, a lot of it is also influenced by student housing and what happened with the whole rental craze, and putting 5, 10, 15 people into a single-family home. But yeah, there was some crazy stuff that was going on over those last couple of years during COVID.
It's true that people were speculating, but the government was speculating with them.
Yeah,
right?
I think our own prime minister at the time, Mr. Trudeau, came out and said, "By now, rates will never go up." And then a year later, they skyrocketed.
So when you allow that type of financing to go on and on and on, and you enable the builders to put a price tag on everything that they want with no regulation, right? I mean, prices went from $600 a square foot to $1,500 a square foot. In some cases in downtown Toronto to $2,500 a square foot. And when I had conversations with everybody, oh yes, Toronto is a new New York City, but guess what? It's not.
It's
right?
not.
Because if it was New York City, you will not have this type of decline over the last 2 years. And we went from $2,000 a square foot now back to $1,000 a square foot in Toronto.
Wages didn't go up. Like, you can't have New York City pricing without New York City wages.
Wages, exactly.
That's a great point, Rushi. It's a great point. Now imagine if one of us told one of our borrowers that, your variable rate mortgage, go variable. Rates will never go up.
Oh, we get sued.
We'd get sued, we'd lose our license, we'd be fined, the brokerage would get shut down. But the leader of our country, the prime minister, has way more clout when he speaks than any of us.
Well, not only him.
So the whole public announced that rates won't go up, and there's no accountability. Our government, again, we're sending, I think in 2024, over $14 billion. $14 billion was taken out of Canada, out of our tax-paying dollars, and sent overseas. I'm all about supporting the world and other countries when our country is doing well. When it's not, you have to look at cutting outward spending and bringing it back inwards. That's the fiscally responsible thing to do for the people that you were elected to protect and to govern.
Absolutely.
That's true, Steve. Not only he said it, but I clearly remember was one of the Bank of Canada interest announcements. And Tiff McCollum came out and said, the rates are going to be with us for some time. When you say that to a general public, you're going to get high inflation, right?
Yeah.
People are lining up to buy cars. I remember people lining up to buy cars, right?
Yep.
There was no car available. Right?
Yep.
People were ordering Range Rovers or Mercedes and waiting 2 years to get them. Well, guess what? Right now, they'll actually call you and beg you to come and purchase a vehicle.
Yeah, car sales are down.
Car sales are down, everything now. So if we went through this roller coaster, right, which I think was kind of not necessary, right? I mean, they could have controlled the rates much better, and I don't think the rate should have ever gone down to 0%.
No. Yeah, right. That was crazy. That was unreasonable. We're at a healthy rate market now. We're at a healthier price market now.
Yeah.
But unfortunately, it's
Oh,
the detriment of many
Well, we're
people.
adjusting, right? Right now it's an adjustment
Yep,
period.
it'll
And
take time.
that was totally crazy. And now we're in a totally normal market. People think this market is down. People think this market is tough. But this is actually what a real healthy, normal market looks like. Not when you sell your home for, $700,000 and 2 days or 2 months after a street above you sells the same house for $900,000.
Yeah.
$200,000 more than what the previous seller sold. That is not a healthy market. That is just
That's speculation.
It's speculation, yes.
And that bubble is going to burst, and we see it now, and
And it did.
we're dealing with it. But yeah.
Power of sale in Ontario and BC is designed to protect the consumer.
No.
Yeah.
To protect the banks.
No.
Because they're full recourse mortgages, right? So let's say if the bank sells your home
there's a shortfall,
for
they can come
100K
after
below
you.
what you owe, they're going to come after you for that difference. In the US,
know,
you can
but-
give your keys away to the bank and it's okay.
But if
No,
they
no,
make
no,
a
no, no.
profit,
Yes.
they share that too.
You're wrong. You're right.
Yes.
In the U.S., they
Yeah.
don't.
Yes.
In the US,
No, you take title.
But I'm saying in a declining market, that's worse than when everything's going
Right.
up.
So in an increase in a growing market, it's protecting the
It's protecting
consumers.
the consumer.
That
Power of
declining
sale
market
was
is
designed to
protect-
protect
the
the
consumer.
consumer,
Yeah.
not the bank.
But it's just because
Right now it is the way you
Right,
pay because
yeah.
people go after you, right? But because let's say I buy a home for $500,000 and now it's worth $1.5 million. I go power of sale.
Yes, they
lender
will
sells
give
my
you the
house.
difference, yeah.
They have
I
to
get the
pay me a whole
difference.
chunk of money.
But
Other
on the
than
on the
that-
flip side, if you bought it for 500,000, you owe 400K. The bank sells it for 300,000. They come after you for that 100K. You don't have the money. Now you got to go to bankruptcy,
Yes.
receivership. You got to sell all your assets. You're done for the rest of 10 years until that's gone off your record.
Yes.
It's over.
Seven
At least in the
years.
U.S. when the
Bankruptcy
market
stays on
goes
7 years. Second bankruptcy is longer.
However, another point which makes this suitable for consumers is that power of sale, a lender can sell the house, can do whatever they want with the property until the last moment. And the keys exchanging, you can bring your payment to the court and the power of sale is off. Then you can go get back to the property. Whereas for full foreclosure is you get title of the property. You own the property. Banks own the
That's it,
property.
you're done.
They can sit on the property. They can
can
wait
rent it,
until
they
the
can
property.
re-
They can
They can
rent
do
it.
whatever they want,
They
yeah.
can
Here
rebuild
you
it.
only have possession. That means you have to. It's costlier for the lenders. They have to hire 2 appraisals, and they have to do the due diligence. They have to
property
clean up the
management,
property management, and by the time they actually get to sell the property, will take months
year
to a
almost,
year,
yeah.
right? And during this time, the borrower always have the chance to come up with the downfall or the payment, and then power sale stops. So as a consumer, you have more rights with power of sale than foreclosure.
So I believe that was designed to protect consumers.
It was designed,
In a
especially
declining
Ontario and
market,
BC.
it doesn't.
it's going to prolong the downfall.
Yeah, you know why? Because no one was anticipating the Ontario and the British Columbia market to be the same with the
As it
same
is today.
decline as
Yeah.
it is right now. Maybe they will look at this and change some of the course. But I've been living here for 35 years and I've never seen a market or a downward
Well, you know what?
trend as much as this. I came exactly in the middle in 1991 and 1899, 1989 and 1991 recession, and I was hearing from everyone that how bad it was, and I never took it seriously because I never experienced it. This is the first time I'm experiencing something that happened in '89, especially. One thing is different now is that you're looking at the prices and the mortgage values.
it's very different than
Very
89.
different,
It's
right?
about 100,000.
Yeah, average mortgage was 100,000 at 21%.
Big
Today's average mortgage is 800,000, at 4.5%. We're talking significant difference in payments. Yeah.
You know what? I would love to see longer term mortgages here in Canada like they have in the US. In the US, they have 25 and 30-year terms, meaning
You'll pay it off.
you're paying it off by that time. Your interest rate doesn't change. You've secured it. You know where you're going to be.
And even if changing a lender, let's say if rates go down or go up, in the US, if I'm not mistaken, there's no breaking penalty. You can just go to another lender and get the same 25-year term.
I don't know about that. You might be right. I haven't done my research. But, I mean,
Because
If that's the case-
down there,
that's fantastic.
But still, 30 years to 15 years, that's more security for the consumer. That's more security to the borrowers because they know their fixed income for the next 15 or 30 years. And, markets being up and down with yields and fixed rates, that's not going to affect them. Unfortunately, in here, we have 1 year, 2 year, 3 year, 4 year, 5 year, where consumers keep getting bounced around between lenders, paying penalties,
products, rates.
Rates go up and down significantly, then you have problems. The rates go up, people refinance, they have to pay penalty to their lenders to get out of their mortgage, or the rates go up, they lock it in.
What many consumers don't know is that banks do offer 7 and 10-year terms. It's just not promoted because, let's face it, the banks make more money when you renew in shorter terms.
yeah, they have no incentive to sell the product to you.
Yeah. But it's available. If someone wants it, they can go into their bank or to us and say,
ask
hey,
for it.
I'd like a 7-year or a 10-year term. What's the rate? If it's someone who knows that they're going to be in this home, this is their forever home, it's a property they're going to keep and stay in, and they want to know what their monthly payment will be without any surprises in 3, 4, or 5 years, then that's the right product for them.
And you know what? I think it's also the bank's fault, right? They put it all on the Canadian consumer that, get a 3-year term, get a 5-year term, because rates will change, so you'll get the benefit in 3 or 5 years.
If there's a benefit, rates
there's a
will
benefit,
change.
yeah.
It could be a detriment.
And even all of my clients, they're saying, "Oh, Rushi, get me a 2-year term, get me a 3-year term," because I think that in 2 or 3 years, they're all financial experts now.
So then get a 5-year variable.
Well, because
Get a
of
5-year variable
because of
down,
the rate
10-year
uncertainty has been around for the longest time. An average consumer, a mortgage holder with a 5-year term, goes through 2 to 3 rate changes significantly during that term. So if their rate is 4.5 and all of a sudden 2 years within their term, they see now the rates are 2.5 or the variable rate's gone down, guess what? They're going to refinance their home to bring down their payment. There goes a set of penalties, right? And then once they go to the lower rate, that's for another 2 or 3 or 5 years. And between that time, they will have significant changes in the rates again. So it's important to stay with your lender during the 5-year term. That's number one. Second, ask for the 7-year and the 10-year term. They're not promoted, but they are available.
Not with every lender, but
Not with every
the
lender.
bank, institutional lenders, they do have it.
Yes. And also document all the penalties and prepayment privileges and really go through them. Ask your mortgage broker about the prepayment penalties and privileges and what the particulars and penalties are. Sometimes you can go to a lower rate. However, you're going to pay a significant price
Yep,
for that.
it might not be worth it,
It will not be worth it.
for sure. So, bottom line, if we could get higher terms that are open after a certain period of time, like you say they are in the US, that would only stand to benefit the consumer.
100%. Because at least you still have the option to switch it if you want to and get a lower rate, but you can also just stay in it for 25 years and you don't have to do anything. That's it. You have your house and make your payments and you're good.
That'd be great.
And that is one reason why the housing market in United States does not change significantly when it changes here with the rates, because most of the mortgages are fixed for 15 to 25 years, right, or 30 years. So if they have inflations or they're changing rates, especially their prime rate, if their prime rate changes, it significantly, changes, the parameters of homeowners in Canada. However,
It doesn't really affect them.
It doesn't affect them really,
they're
unless
the fixed mortgage.
between those 2 years, let's say 400 million people live in the United States. How many of them are homeowners and how many of them are renewing within the exact same time now? A lot of them are in the 15, 20, 30-year mortgages where they're not going to be affected. What inflation is going to affect them and the prime rate going up is their regular spending every day with their credit line, credit cards, and so forth. In Canada, when you're moving prime rate, it significantly impacts homeowners and the mortgages.
I think we have the most amount of renewals coming up in the next year or two in the history of Canada.
Wow. Yeah, I think something like 80% of all mortgages are coming up for renewal
Something like
in
that,
the next 1 or 2 years.
that is because so many people bought properties in 2021, late
Yeah.
2022, and guess what? 5-year term. So 2021, 2026. So by end
If
of
they
this
would have
year,
secured a 10-year term then,
We would be in a
they'd
different
be,
market
they'd
right
be
now.
in the twos. They'd be in
Yes.
the twos and they'd be paying
So just
great,
to put
There'd be
things in,
less
great,
default. There'd be
less
less default.
defaults. It'd be very
just to
different
put
market.
things in perspective, the person who bought a property in 2021, they could be at 1.99 interest rate right now, coming for renewal this month
At 4% now.
at 4%,
Four and a
which
half,
is still not
yeah.
bad. But guess what? If it was in previous year, that would be 5.5 or 6%.
Now your
because the
payments
rates went up to
double
6.
and income hasn't
Moved. Whereas if when they came to their bank or their mortgage broker then, they were offered a 7 or 10-year term, maybe not at 1.2%, but at 2% even,
3% even.
that would be great. So yeah, the 7 and
consider-
10%, 7 and 10-year term are higher typically than the 5 or 3-year, but not by that much typically, and it builds security.
Absolutely,
Build
but
security.
considering house prices in late 2021 and early 2022, you wanted the lowest rate possible, right? Because you're buying homes for average price was 1.3 million. Now average price is 940,000. So it was significantly higher. So a 0.5 interest different in your rate would have been significant in your payment. So that's why people opted for getting the lowest rate possible. Plus announcements coming from Federal Reserve Chairman and the Prime Minister that we're not moving rates anytime soon, which was not true.
Which was
because
crazy.
a year
Crazy
after
to
they
say.
started talking about inflation and stuff.
So when we say a 7 or 10-year term to someone, that's shocking them because if they want to break their mortgage, that's going to be a huge penalty
Significant
in their mind. However, did you know that in Canada, the law states that if you have a amortized mortgage, that by the end of the amortization period, if you stick to it, will bring the balance to zero. Any terms greater than 5 years, after the 5th year, the maximum prepayment penalty is 3 months of interest. No interest rate differential. So you could do, if you're going to go for a 5-year term, have a look at the 7 and 10-year. If it's not that big of a difference and you plan on staying in the house for at least the 5 years and probably longer, 10-year term's good because at the end of 5 years, to break it, you're only paying 3 months of interest penalties, which typically is a few $1,000s. It's not that much. But you've got the security.
Like I know for reverse mortgages that are more like 10-year, 15-year, 30-year terms, they have that always built in. After 5 years, it's a 3-month penalty, nothing else.
Same with the banks. They won't tell you that, but that is a law in Canada. Well, I guess that wraps it up for our first podcast. Thanks for tuning in to Mortgages Uncensored. Sam, Rushi, thank you for joining us. Please remember, subscribe to our YouTube channel, like, comment, and follow us on our social platforms of Facebook, Instagram, Twitter, and LinkedIn. And we'll see you again very soon. Please click the link below to go to our website. Reach out to us if you have any mortgage-related questions or concerns, 416-674-6222, or email us at info@clovermortgage.ca. Have a great day, guys.